And I think that Solana has proved itself to be much cheaper and much easier to use. And it has gravitated towards, the consumer application category because, arguably the most successful consumer application that exists on crypto is meme coins and pump fun. That has just pulled that user base into Solana. That's their first blockchain in many cases. I mean, the number of people who first time, opening up a Solana wallet with Trump meme coin, I can't remember what that stat is, but it's staggering. And at the same time, the first people that are touching a decentralized financial services product was probably in DeFi summer with Ethereum. And the narratives kind of compound over time.
This episode is brought to you by Arkham. Arkham allows crypto traders and investors to look inside the wallets of the best traders, largest funds, and most influential players in the crypto markets today. We'll hear more about Arkham later in today's episode. Quick shout out to Permissionless 4 coming this summer to New York, June 24th through June 26th. We'll have speakers from all across the industry, including Hayden Adams, Kyle Samani, Guy Young, and more. Get your tickets today by following the link in today's show notes, and make sure to use code BELL10 to save 10% on your purchase. See you there. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another roundup of Bell Curve. We got Michaels 1 and 2, Vance, fellas. How we doing?
Doing great.
Doing good.
Surviving with hopefully no data compromised, so to speak of.
I'm sure data has been compromised, and apparently it's been compromised since January, which is nice.
Dude.
No bueno.
Bad. Yeah, see everyone at Con. ETH Con, let's go. Terrible.
Dude, the event organizer in me, I just have, my heart goes out because I felt like this too. Remember when Token 2049 Dubai happened and the floods happened in the city? I was just like, oh man, that's completely out of your control. But have you heard much about Con this year? I've never been to Con. I don't know if you guys have, but
Never been.
Yeah, it's a fun place. South France is great.
I've heard good things. Yeah. And it feels like it's a good time because ETH is sort of catching a little bit of a bid here for the first time. And well, I mean, it's been doing all right, but the ETH BTC trend feels like it's at a pretty sharp reversal for the first time in over 2.5 years, which is great. We've got Tomas, who's, I think, leading like a very, there were kind of whispers about this change. Is it real? Is it not? But I think he's just done a phenomenal job. I see him all over my Twitter saying all of the right stuff, channeling the right energy. I think it's the stuff that investors want to see. And it's very reassuring.
There's a great tweet by
Junkyard Dog.
Yesterday. I can't remember who said it, but it was some conversation of like, hey, we're talking about like these are the top priorities. I think it was Matt Hogan from Bitwise, and he replied to the tweet and he was like, if you ever need help with the conversation, let me know. It's like, what's his name, Suarez from Miami, being like, how can I help? And I think that type of energy just it reinvigorates the ecosystem and community, which is exactly what everybody was looking for when there were organizational changes a few months ago. So stepping into that otherwise void, I think is huge. I think a lot of this stuff was Petra originated. If you look at the price chart, it basically once Petra went live, it kind of re-rated. I think there was just an absurd amount of shorts on ETH that had to cover, and that I think now re-rates it to kind of where it should have been probably for a while. And the fundamentals have improved. I mean, I've been listening to some podcasts of pretty negative ETH people for the last week or so, talking about how the fundamentals haven't changed and it's still a dog shit coin and blah, blah, blah. It's like, actually the fundamentals have improved drastically. And if you look at the changes from when Petra went live, it's net deflationary. So things are good, at least in the Ethereum world. And
Zero Hedge had a great article too, kind of just like trying to rationalize the move. And, it was all about institutionalization and stablecoins. So I think the fundamentals have improved, the narrative has improved, and just the attitude has improved. And I think one interesting thing with the move in general is one thing that we monitor is funding rates for perpetuals. And our intuition kind of going into this year after the past couple of years is that the perpetual market, and for those of you who don't trade perpetuals, basically it's a perpetual future that you don't need to roll over month to month or quarter to quarter. You have to pay a funding rate. In the case of Binance, I think it's every 8 hours. In the case of OKX, I think it changes hourly. But this is the main source of leverage and funding and financing of leverage positions within crypto. And they used to spike these rates whenever a move like this would happen. It would spike to 70-80%. Like when Athena first launched, I think it was at 30 to 50%. The last big bounce we saw, like end of last year, these things went to like 20 to 30%. And so the bounces on these funding rates and how high they spike are getting lower and lower. And it's the biggest move for ETH since 2021. And the funding rates only spiked to, they're back down to kind of like 7% for ETH and like 3% for Bitcoin. But it seems like that market has become so much more efficient. Maybe the presence of CME capital has kind of changed those dynamics. Maybe the presence of just like more crypto mobile capital on chain, going in and out of Athena has changed that dynamic. But personally, I think the days of the funding rates going to 50% plus are pretty much over.
The other element that I think contributes to this, and it's hard to get a sense of what this looks like, but just from having conversations with some of our counterparties, it seems like the options market is getting actually pretty robust. And options are just another type of way of a structured product around ETH, but that won't translate into the funding rate because if you want to hedge, you buy a put, and if you want to go long, you buy a call or sell them. Conversely. That doesn't translate into funding rate changes, whereas perps, perpetual futures, will have direct relation to the funding rate, and that's how you can kind of identify where the market is net long, net short, etc. But if you're the seller of a bunch of calls or the seller of a bunch of puts, you're going to have to hedge that, and that's where I think the translation comes in. So just the advent of a more robust options market will probably mute the funding rate, in addition to the stuff Vance was just saying.
Yeah. Sorry, Vance, go.
No, I think they're, not to argue against myself, but, and sorry, I sound so nasally, I have a cold, but I think there's a chance that the funding rates do spike towards 20 to 40% again, actually. But I think right now, this is just a spot-led move.
Right.
Like, that's kind of all you can really assign it to. I don't think this is really the leveraged apes going for it. It feels like this is just people buying spot.
The other thing, maybe jumping the shark a bit here on other news, but the other thing that just came out, which I maybe people kind of forgot about, but we've been tracking, is May 30th. FTX is distributing to all of the larger creditors, and I think the threshold was maybe 50K or 100K in terms of claims. This is the larger one. The previous one, I think most of that has already gone out a few months ago, but May 30th, over $5 billion will be distributed to large creditors on that single day, which and who knows where that goes in terms of how much cash is held, how much cash goes back into crypto, what crypto assets are bought. But I would imagine that will be kind of a day of just significant buying, people trying to catch up because all the FTX creditors had crypto on FTX when it went bankrupt. All of those claims got dollarized the day after the bankruptcy. And so what everybody gets back is cash, but what they wish that they had was crypto over the period of the bankruptcy on, November 10th, 2022 until now. So there will probably be, some significant buying right around the end of the month. So all in all, I would imagine, there will probably be more catching up. The other vector here is there was a lot of ETH and Bitcoin on the FTX balance sheet. So customers put in ETH and BTC. But what happened behind the scenes was a lot of buying of Solana. And so maybe Solana has a bit of a catch up, but if the customers are expecting that they want to rebuild those positions, it's probably going to be more ETH and BTC.
One note, by the way, since we missed last week, we should mention on options in general is that we had the largest crypto M&A to date. So Coinbase closed the acquisition for Deribit for 1.9 billion. It seems like 700 million of that was cash, I believe.
2.9 billion.
Oh, 2.9. Yeah. So Pretty excellent. I mean, Coinbase continues to kind of build out their. We'll talk about Coinbase. It's been a maybe 2 steps forward, 1 step back a week for our boys at Coinbase. But yeah, we had an S&P 500 entry for them, but also we had a data breach, and I saw as well that there was an investigation from the SEC into potentially misstating the amount of customers that they had. That Coinbase had, but still interesting for Coinbase. I want to just also return to Ethereum, and I have a question for you guys. It has to do, not to divert us too much here, but it has to do with this kind of like internet capital markets meme, which is taking off in Believe. And maybe it should set the context. I'm curious of what you guys think about this. I don't know. It seems like there are launchpad wars that are happening on Solana, which I find somewhat interesting. But the thing that I do find very interesting, I feel like another bull case for Ethereum that people aren't really talking about is it seems like Ethereum is kind of running away with the DeFi as a use case. Like basically everyone that's building from BlackRock to Coinbase, et cetera, they're all building on Ethereum. And it doesn't seem like Solana has been able to get the amount of traction, especially on the RWA front, that they would have liked. And Solana DeFi is, pretty quiet, especially compared to Ethereum. The irony of this is where Solana is winning is consumer. And it feels like even the consumer stuff that starts off on base, it kind of takes off, but can't really get the momentum. And then like everything from like virtual, like compare virtuals versus AI, 16Z. And the last, I've loved the last like kind of ironic thing to me is, the EF has historically been kind of lukewarm on DeFi, and the Solana Foundation's like laser focused on RWAs, and it's almost like against, the best. Yeah, they both ended up with the use case the other wanted, which is kind of interesting. But what do you guys think about that?
I think somebody tweeted that like Ethereum is debt capital markets and Solana is equity capital markets, and I still think if I were going to launch, a token today, it would be on ETH-L1, just because that's where most of the stable coins are, and like the exchange support is pretty seamless. But you are right, like consumer is definitely orienting towards Solana. I do think Abstract Chain and like other L2s that I can't think of, like Base. They're trying to do it, but it's just like it doesn't seem to have that recipe, and like it's kind of like the mirror version of the argument. It's like, well, why can't ETH have like the consumer stuff? It's like, well, it hasn't really had it historically. Like there's Phantom, like there's all this path dependence, there's all this history and lore. And then Solana says like, well, why can't we have RWAs? It's like, well, it's like because like really, it's like 5 years ago, DeFi Summer happened that brought all these stables on chain. People love ETH. There's yield. It's a positive carry trade, which they can finance against RWAs. It's like, it doesn't really matter why it is happening, just more so the fact that it is happening. And I don't think they're going to disrupt each other necessarily. But I will say with consumer, the narratives are happening so fast at this point that like we're like Michael and I are missing them. Like Rajiv was like, check out Believe. Like it's like really, and I think that was like 2 days ago. And then today at IC, he was like, I think Believe might already have kind of like ran the narrative through. It's like, I really want consumer to work, and I'm glad that there's people and funds and ecosystem focusing on it. I think the higher probability shot that institutionalization really takes shape and grows a lot. And I'd rather ETH own that at the end of the day. Deep capital markets versus kind of like broad ones.
I'm yeah. Look, they can both win and still be extremely successful. I think if you think about, if we're to ex post facto the reasons why, I think it comes down to the tech stack. Being World War III pervasive as a base layer means that financial services can run on you with full trust and never going down. Being able to have that uptime is just like crucial for being able to have any sort of payments or assets or liquidations or leverage. Like all of those things are just like table stakes requirements that you can't have if you have any sort of downtime. Whereas and what you sacrifice in doing that is potentially cost and throughput. And if you want to have a consumer application product, that consumer application product can have moments of downtime. You can be down for an hour or two, so long as it's really cheap and easy to use. And I think that Solana has proved itself to be much cheaper and much easier to use. and it has gravitated towards the consumer application category because arguably the most successful consumer application that exists on crypto is meme coins and pump fun. That has just pulled that user base into Solana. That's their first blockchain in many cases. I mean, the number of people who first time opening up a Solana wallet with Trump meme coin, I can't remember what that stat is, but it's staggering. And at the same time, the first people that are touching a decentralized financial services product was probably in DeFi summer with Ethereum. And the narratives kind of compound over time.
Yeah.
But I do think that it's the technology and the user experience that helps to further cement those narratives, just because they have different trade-offs. And in talking with, and there will be financial services and things on Solana, like the Sol Strategies with Superstate is launching on Solana. It's Solana, originated equity, and it'll have Solana presence. I'll be curious to know whether or not there's other tokenized equities. I know Ondo just did their first transaction, settled with JP Morgan and Chainlink a few days ago. But I would imagine that RWA's financial services, especially mission critical financial services, will continue to live on Ethereum. And yeah, if you're building a consumer application and your goal is to find the most users possible for your consumer application, I think it only makes sense to build on Solana.
And I would say also with Hyperliquid owning perps, like I think Solana people believe that they're going after Ethereum, but I think really their competition is Hyperliquid.
Okay, I've got one for you on this. So I agree. Interviewed Jeff. I found it to be a very thoughtful founder, super interesting perspective, kind of built like a general purpose L1 in the opposite direction, at least that Ethereum and Solana did. The go-to-market is, hey, we're, it's Ethereum that said credibly neutral, but Solana also was like, hey, we're a general purpose platform. Come build whatever you want here. To your guys' point, path dependence. There's an element of brand, by the way, which matters a lot here. So for Bitcoin, the reason I've always liked store of value is it's very simple and easy to understand. It's like the one thing Bitcoin is known for. But Ethereum actually has that too. I just think of it as finance. It's like on-chain finance. Like Ethereum's really won that as a brand. And Solana's probably, honestly, they're going to have, I think they've won this market. And I think they will decide whether or not, like here, let me just show you guys some charts here. So like you can see basically everything from, the amount of, originations that are happening to new Launchpad tokens to the aggregate market cap by Launchpad. All these look like pretty healthy charts. So all of this to say, like, I think memes are going to be more durable here than people thought, but there definitely is an enduring brand here. And I think, this is kind of like Solana is going to be known kind of as the consumer and meme brand. And I think that's really powerful. I think there's going to be a lot of interesting experimentation, but I do think Ethereum has, a brand to it, which is more finance. And I think for finance, you need like safety and security. That's kind of what you're selling at the end of the day. And I think Ethereum has that. For all the criticism that it doesn't move fast enough, I don't hate that if I hold a lot of assets on ETH1. I've always thought that.
Yeah. How often are you interacting with, let's say, I don't know, Twitter or Instagram versus your mobile banking application? Which one matters more in terms of mission critical versus like ease of use and speed?
Arkham was created to make blockchains human readable and simplify blockchain data so that it is meaningful and useful to the average crypto user. With their new exchange, users can see what the top traders are buying and selling with Arkham Intel, and then trade on that information with Arkham Exchange. To get started, follow the link in the show notes below. This episode is brought to you by Marinade. Marinade is a high-performance staking delegation platform that brings both liquidity and security to the Solana network by connecting SOL holders with the best staking rates on Solana. Follow the link in today's show notes to learn more. Yeah, I mean, and also I have no idea, on the Believe thing. By the way, Believe, just to explain that, because it did kind of take off on, I think there's, buried within this, I think there's something interesting I'd like to get your guys' opinion on. And we were talking about the Philippe Lafont interview before this podcast, and he brought up some interesting points about the challenges that Venture's going through that you guys have been highlighting on this podcast for a while now. But Believe is basically, it's a launch pad where if you tweet something out and if you comment the Believe app underneath, if it reaches a certain amount of engagement, it launches automatically on this launch pad. There's slight improvements to the bonding curve. So unlike with they've built in sniper protection. So there's a heavy tax on the early buying. So it doesn't just get immediately sniped up. There's some amount of support around 100K, but it's basically like you tweet something and it launches a meme coin. And the idea is that it provides funding for apps, which might not be venture scale. And I'm curious to get your guys' opinion on that. I got to be honest. Look, I haven't looked into Believe enough. I don't believe that Believe solves that problem. But there is an element of truth, which is there might be a gap in the funding model here where some of these applications, maybe they're not venture scale businesses, actually. Maybe these are, but like Friendtech is actually kind of an interesting example. They rugged, but look, they took over. They didn't really do anything, but they did generate like 50 or 60 million in fees. They clearly weren't venture fundable. Also, the founder walked. Okay, this is a bad example, but
they got funded.
Okay, yeah, they did get funded.
Okay,
but
not endorsed.
Okay, let's say that there are lots of examples of this on like let's just say, especially with AI, it's becoming cheaper and cheaper to like start a company. And on chain, it's easier to build more scalable businesses. So I don't know. Let's say there is you can build something with 4 or 5 people that does 10 or 20 million kind of max. It's cash flow positive, but it's not a venture outcome. Are tokens a good funding mechanism for that? I don't know, but Blockworks was like this for the first 5 years, right? Like we're kind of in between, venture scale and, like a small business loan. And yeah, it's a really awkward place to be for a business.
Well, so a couple of things there. Maybe just the level set on like what venture scale actually means. When you are accepting money from a venture firm, what they are implicitly doing is they are underwriting that investment to return whatever fund size they have. And so maybe they're buying 20% of your company, 15% of your company, and they have and they're writing a $10 million check, let's say, but they have a couple $100 million fund. So they are expecting that you will get to a multi-billion-dollar valuation, and they will maintain their 10 or 15% ownership, and then you will sell for a multi-billion-dollar amount of money, and that's basically the game. And if you are pitching VCs, just expect that that's how they're going to have to view you for them to write that size check. Now, is every business that gets started and is successful going to be a multi-billion-dollar outcome? Of course not. And there will always be alternative means of fundraising. But if you're raising at $100 million and you're like, this business taps out at 250, like that is not a venture scale outcome. It's an amazing outcome for the founders, but that's not going to be something that you can necessarily have a venture firm underwrite and expect it to work for you.
Right.
At the same time, you mentioned, well, maybe tokens is a better way of doing this. The problem with that is if you are a token founder, it is a lot more like being a publicly traded CEO than being a founder of a private tech company, in that you have a community of people who may own your token, maybe shorting your token, maybe levered long your token. You have no idea. And I think just like the answer isn't just launch a token. The answer is there are certain things that need to be protocols and are better in a decentralized manner and provide transparency and compliance and things that just go much better than work much better in an open and tech forward, tech first perspective. But it's not like the selection bias of, oh well, you're not going to become a venture scale outcome, so therefore we're going to do a token and like sell this thing. Like that also doesn't work, because also at least crypto venture investors will look at that the exact same. They'll be like, okay, well, this can't be a multi-billion-dollar protocol, so therefore we're not going to invest. Yeah. So I think there's probably some meeting in the middle, but I agree. Maybe it's meme coins that you're not like selling a bunch to venture investors, and the community gives you some liquidity, and there's use cases, and like maybe that works. But it's not like we're going to go raise money for this thing from a bunch of venture investors, and whether it's equity or tokens, and expect that they're going to write big checks.
I will say the other side of this is kind of like the fund landscape at the moment.
Yeah, right.
There are like a bunch of funds now, maybe not a bunch, but there's like 3 or 4 or maybe more that are looking for kind of like these like 50 to like $200 million market cap, pretty narrow DeFi primitives that They think have the right teams. They think can scale. They think have like momentum. And a lot of these DeFi teams are like, one example is Syrup. Like you've seen Modular Capital put out a thesis on them. I think Thea did as well. But like the thesis is like, it goes from like 150 to 200 million to like a billion FTV, or maybe 2 or 3 billion FTV. I think that is like within the realm of possibility for the quantum of capital that exists within crypto. Then you have kind of the coins that are like 1 to 3 billion, call it like Maker or like Aave or like, like Morpho, like the bigger kind of more hyperstructure style DeFi protocols. And I think for funds like us, it's like betting on, can it get from 1 to 2 billion to like 20 to 30 billion, like a true venture style, like 10x outcome. And I also think we have the quantum of capital and probably like the future inflows from more traditional investors for them to value these things on a PE basis with a lot of forward growth and say like, okay, that can happen. And so I think like those two are kind of like where the internet capital markets like thesis rubber meets the road. And then you have like kind of like the big game hunting, which is like, can something like Hyperliquid go from like 26 billion today to like 100 billion? And I mean, the like basically you will need to like put a serious dent in one of the historical incumbents, Coinbase, Binance, one of those, to make that really happen. And like a general rule of thumb for us is like, other than Bitcoin and ETH, it is extraordinarily hard, not saying it's impossible, for protocols to breach the 100 billion FTV mark. It just like, it really is tough to stay above that. I think Solana probably is still below that. Maybe it's above it slightly, but like that's like the line of demarcation where it really gets hard. But like
key point is stay.
Yeah, stay. But like the first two buckets, like that's that's what we tell LPs is like the meat of the interesting acquisition opportunities in liquid markets. It's there.
I'm curious what you guys think about XRP and Ripple. And this is going to sound a little bit weird, and I'm not actually sure if I really believe this, but I do think that probably over time, Solana and Ethereum look less directly competitive with one another. Solana is really competing for execution layer fees. So maybe Hyperliquid, maybe Base, maybe that's what the more direct comp in comparison is. But I think crypto natives are going to kind of underestimate XRP and Ripple because it's centralized and a shitcoin and people don't take it seriously. But they're making a real run. They're at least attempting to compete on the institutional finance use case in the same way that ETH is, right? Like they acquired Hidden Road. They are making they're a pretty active player even in Ethereum DeFi, doing things like providing liquidity. There was that rumor that they were trying to acquire USDC and Circle. I know it feels a little funny to say, right? But I mean, do you think that that it feels like who else is competing for the internet finance use case? Ripple is competing for it.
It's a tough analogy, but because of the way that the story ended, but it does in a lot of ways feel, and I think that they are at least doing better than how this analogy will sound. But it's almost like the AOL Time Warner situation from the 90s, where you have AOL, which had a business, but it wasn't sustainable at the hundreds of billions of dollar mark that it had in the public markets as a publicly traded company. It was riding the coattails of the internet wave, and everybody's going to move on to the internet. And they were right; they were just early. But then they did this $105 billion acquisition of Time Warner, and it's like widely agreed upon as the worst acquisition in the history of M&A, just because it cratered, it zeroed. But I think what Ripple has as a playbook is something similar, which is that they've created this asset, XRP, and they are being highly strategic and acquisitive, using it as an instrument to buy real businesses. And Hidden Road is the first. I'm sure that we will see other major announcements from other major companies where they will be acquiring businesses and pumping them into the Ripple ecosystem. I think that model will work for a while. I mean, look at what Robinhood just did as well. They bought an Ethereum L2. Buying these assets and getting your reach into your customer base, into your product, and extending that and connecting it to the blockchain, I think is going to be kind of like the two different angles that a lot of these businesses move. Obviously, Ripple is crypto native, and they're buying businesses that kind of latch on features and capabilities to their crypto native ecosystem. Whereas Robinhood is moving the opposite direction. They've got the users, and they're kind of like buying things to latch to connect to the blockchain. But I think that like the walls of like, are you Web3 or are you Web2 are going to slowly start to break down. For the right and strategic initiatives for these businesses that recognize the transition that's going on. But I think we are just at the start of kind of an M&A craze, maybe not craze, but wave over the next year. And there will be a lot more announcements coming, I'm sure.
Yeah. It's just not something that, it's kind of interesting in the same sense as well that, Hyperliquid is choosing to, it's a more like, obviously today it started from a more centralized point that allows them to compete on different vectors. They, I think, wanted to decentralize over time. But that's largely been the story of crypto for the most part. Bitcoin started, it's the most decentralized. Everything else has been operating on a spectrum of decentralization after that, trending towards more and more centralized. At some point, at least my hope and I think this is how it actually will play out, is the market will tell us that this is too centralized and we don't want this. Like, decentralization isn't just a buzzword. It does give you certain desirable properties, I think. And, we don't have to rely on, hey, social shaming if you're not decentralized enough. The market will tell us, how important it, like where the line is in terms of how important decentralization is. So, yeah, but it'll be interesting. They're making a run at it. Over the years, we have seen a multitude of hacks, rugs, and bundled launches. The number one way that crypto traders can protect themselves and the wider community is through on-chain analysis, knowing who is moving funds and where those funds are going. Paired with their new exchange, users can see what the top traders are buying and selling with Arkham Intel, and then trade on that information with Arkham Exchange. Arkham's exchange provides traders with the tooling and liquidity to take action in crypto markets based upon their on-chain observations, bringing them the world's first exchange powered by crypto intelligence. To get started, follow the link in the show notes below. Hey everyone, quick shout out to today's sponsor, Marinade. Since launching in 2021, Marinade has expanded their suite of products to provide solutions for both DeFi users and TradFi, including liquid and native staking, as well as direct enterprise integrations. Marinade's platform is optimized for institutions to securely expand their exposure to Solana. Whether through the provisioning of custodial or non-custodial yield, integrating staking rewards into Solana financial products, or leveraging Marinade's best-in-market rewards rate for revenue and treasury management. Whether you're in DeFi, TradFi, or somewhere in between, Marinade has something for you. To learn more about Marinade, follow the link in today's show notes. Speaking of being a run at things, I would love to get the download on the Genius Act. So this is the stablecoin build it we've been talking about for, it feels like 6 or 9 months at this point, but it felt like it was on the finish line at the end of last week. And then there was a coup, which was staged by probably safely not friend of the pod, Elizabeth Warren, on the Democrat side. And
Pocahontas, shout out.
And she riled up some Democrats, and yeah, they ended up killing the bill. It sounds like there were some.
Well, didn't kill it.
It didn't kill it. Sorry, delayed. I can't. They did some sort of they blocked a procedural vote, so it couldn't get passed.
The quick backstory is that there was over the last 2 weeks, there's just a lot of vitriol in DC, let's say, over what's been going on. Not necessarily even having to do with crypto. It's just like the tariffs and the trade stuff and Doge stuff and Elon in general. And I mean, look at how much Elon has riled up people all over the country. But I think broadly, what happens when any of these bills are kind of working their way through committee or working their way to the floor is that there's just also a lot of horse trading. And I think what happened was there was kind of a procedural change where the Republicans didn't kind of disclose the Democrats on something, and they thought the Democrats thought that there was that they were going back on some of the things that they had already negotiated, and they were really pissed. And so basically, they kind of like threw a blocker on the committee vote, which is what didn't pass last week. And our understanding is it was largely procedural. They've kind of ironed out a lot of the issues with kind of the stuff that now they're coming to the middle and meeting somewhere on what they need. And I think in general, our expectation is that this bill will pass. maybe it's not in this exact text that just got released today, but we're getting much closer than even the last text that was released. And generally, this, like we've been saying, provides market structure for stablecoin issuers in the U.S. And yeah, I would imagine that this will pass, in the next few months. It's kind of a question now, or like May 15th. What's the timeline? Because everybody knows that Congress is off for a few months, essentially during the summer months. And so there's kind of a question as to like when does the vote happen and like how quickly can it get done and priorities and all that. But expectation is that this will pass and it'll be really positive in general.
Yeah, I mean, I don't think there is a bad outcome here. If they do not enact regulation, there will be deregulation. There will be safe harbors. There will be no action letters. There will be whatever you want to call it, pardons. Who the fuck knows? Like there will be a massive deregulatory agenda, and so this is really like the Democrats' like last chance to get their own feedback into the crypto world. And so I do think it will pass. The inside baseball that we hear is effectively like, look, you either pass stablecoins or we deregulate, but like the political ammo that the industry has accumulated over the years is not going to be spent on this fight at this moment. I think there is a lot of ammo that's being spent, but market structure is the be all end all that will happen at the end of this year. And if stablecoins don't happen right now, they will either be deregulated or they will be put into the market structure bill. And the market structure bill is effectively the Super Bowl of, what could happen for the industry. And again, if that does not happen, like we will get deregulation, which will effectively make it happen anyways. But I increasingly feel very, very, very good about the prospects for regulatory change. And the SEC can also do a fair number of things just by rulemaking. Like Hester Peirce said that, there's going to be a tokenization safe harbor for securities on chain. And so I don't see how we lose. And I think a lot of the people on the Democratic side are pretty acutely aware that Fairshake has a gigantic war chest. That's the crypto super PAC for 2026. And a lot of them have midterms. So, they kind of need to get with the program or just kind of be left behind and maybe even get primaried.
Yeah. I totally agree with everything Van said. I think just to hammer that point home, it's like, I think that there's, huffing and puffing that can go on, and you need to do that to kind of save face from, maybe not even a related perspective to what the content is actually about. It's just you're pissed off about something adjacent, and therefore using this as a platform to kind of like make your voice heard. But when the pedal hits the metal, they will all come to the table. But what I think is most important here is market structure is still the number one priority, and stablecoins will be a definite something that happens. It's just a question of how and when, but it's not really where the political momentum is being put right now.
Also, like, there's this memo circulating right now. It was characterized as like the Democratic position, so I just like downloaded it and read it while we were on the pod, and it's from Elizabeth Warren. It has her like watermark on it, and like how much clout Elizabeth Warren has right now? Like less than zero, maybe negative. Like it's like when you're charging up the hill and you look behind you and there's nobody else. Probably it's just not an effort worth making. So I expect this legislation to go through.
What's going on with the Democrats? I couldn't even articulate to you what their policy position. I thought at least this far in there'd be some, someone would take some leadership position and you'd kind of hear what they're reforming towards. I literally just, crypto aside, I couldn't tell you what they're starting to reform around.
They're reforming around anything that's anti-Trump, and that's it. They don't have a real take, a real stance. I think there isn't a real leader, and it is kind of like a grab bag of whoever. There are many people that could take the reins, but nobody's done it yet. I think it's still pretty early to see like who the early front runners will be. I saw recently that Pete Buttigieg is apparently lining up for a 2028 campaign. I'm sure Gavin Newsom will be throwing his hat in the ring. It's going to be really interesting to see, all the people that come out of the woodwork for next election cycle. Obviously, have to get past midterms next year, but I think given everything that's happened with the tariffs over the last just week or two, it feels like everybody was, in terms of financial markets mostly, was caught off sides in terms of this is going to be the biggest recession that we've seen since the 1920s. And we're going to, inflation is going to 10% and recession chances are at 75%. And now you've got JP Morgan, Goldman Sachs, everybody coming back and saying, actually, never mind, take it all back. And it's just like whipsaw completely. And I think that's what the catch-up trade has been over the last few weeks. But as soon as that gets completely, ameliorated, and we also saw the tax bill draft get put out, which I think has a lot of really, really good things in it. But I think one thing that I don't know, I didn't see as much reported on is these $1,000 accounts for new children or children born in the U.S. And I think that will go a really long way for just like getting more people on the side of this program. And I just didn't see very much reported on that or talked about since, but everybody else is focused on, what's my tax rate going to be? But I think that was a really big element that kind of went unnoticed.
Yeah. It's a really interesting time for political life in the U.S. I can't really remember such a time when it was as dominant as it feels like at the current moment. But anyway, we're not a macro or politics podcast, but interesting
just
moment.
Pretend to be one.
We just we LARP every once in a while. This episode is sponsored by Citrea. Citrea is the first zero-knowledge rollup to enhance the capabilities of Bitcoin block space, enabling Bitcoin applications and unlocking Bitcoin's full potential as a programmable financial platform. With Citrea, developers can now tap into Bitcoin's liquidity to build scalable payment systems, privacy solutions, and more. Citrea is currently in its testnet phase and is approaching its mainnet launch. To learn more about Citrea, follow the link in today's show notes. Okay, I would love to get your guys' take on these three Coinbase stories. So one, Coinbase was inducted into the S&P 500. So congratulations to Coinbase. That is very cool. It's cool to have a crypto company in general as part of that index. And I think I saw Victor Boonin tweet, it's not like they're number 500, they're number 127 or something, either 127 or 147. So awesome.
I think Vance actually was the one who told me this, and I think this is the case. You know who they replaced?
Who?
Discover.
Really?
Out with the old, in with the new.
Wow, love that. That's great. I mean, whatever. I got nothing against Discover, but the optics of that is pretty cool. So, okay, that's great. So congratulations.
And the fourth story, they shipped the 4-hour candles. Which is really bullish. Congrats, guys.
All right. So then on the more negative side of things, there was a data breach. So it looked like 1% of Coinbase users were impacted. No, private keys or anything, no assets are at risk, but you did have about 1% of users that had sensitive KYC style information.
Oh yeah, no, it's all good. Just my home address, my photo ID, my social security number all got leaked, and I don't think it was like 1% of users posting at random.
It's 1%.
It is the top 1% of users. If you have any size on Coinbase, I think you got doxxed. And I mean, like, we've moved away from Coinbase and using it for this and a variety of other issues, but like, it seems like they have momentum. It seems like at the same time, like they don't have any idea what the fuck they're doing.
Well, yeah, I mean, it's obviously not great, especially when you pair that with it's not happening over in the US. But yeah, in Paris, there are legitimate kidnappings and people are getting their fingers cut off and stuff, that is scary. You hate to hear that. That is,
bro, that's happening here too. Go to Los Angeles.
Is it really?
Yeah.
Damn.
Well,
that right. In Paris was a specific crypto one. I don't know if the ones in LA are, but
dude, the craziest story of a home burglary that I've ever heard. Have you heard about Ted Sarandos' mom, the CEO of Netflix? Dude, this happened like 3 years ago. They broke into the house that Ted Sarandos, the CEO of Netflix, that he bought his mom. They broke into her house, robbed her, and killed her.
What?
Yes. Like, no. Dude, like the whole like, oh, it's all good. You didn't get your private keys leaked. Like, fuck that. Like, I'm pretty pissed at Coinbase. I really would prefer if we do not use them at all.
Well, so my understanding of this is going to cost Coinbase, I think it's 180 to 400 million dollars or something like that. Looks like the
That's what
potential
they're
uplift.
reserving.
That's what they're reserving.
It could be a lot more if the depth is a lot higher. Like one very easy way that this is bigger than that is if it really is 1%, but the 1% is the highest value customers. That is extremely costly.
Mm. So there's that. I do think I mean, well, to maybe defend Coinbase a little bit here, it seems like North Korea bribed certain employees and then um, I don't really know how you defend against that. That feels tough. There's also a Coinbase element to this and there's a KYC element to this, which to me, this actually does feel like crypto solves this. If you it feels like there's a ZK way of displaying that you're not on some sort of sanctions list where you shouldn't have to create these honeypots of valuable information, right? Like that. It feels like KYC is also at fault here as a system. But
We have the technology.
yeah. Why do you guys think there's no political will for this? I'm surprised. There's not a lot of bipartisan stuff in Washington these days. It seems like it's basically anti-China and anti-privacy. Like there's still no one is fighting for this. I'm curious.
I mean, there are people that are fighting.
Anti-KYC?
Yeah, anti-KYC or just more, strict enforcement on like private. Like we ended up getting that, banks are required to, record every transaction under, I think it's like $600 or something.
The Patriot Act. That was and the Bank Secrecy Act. I mean, which Patriot Act extended the Bank Secrecy Act. I mean, look, there's also a really fun, $10,000 limit for any transactions that you send over the wire network or ACH that get flagged by the FBI. But guess what? That $10,000 limit hasn't changed in like 30 years. $10,000 years ago was a lot of money. Now, relatively, not as much. And so I think that like the surveillance that happens in the financial system is pervasive. I don't think that you're ever going to find a political stance that will get enough attention to be able to go against that. But privacy is a real thing. It's just you're up against sanctioned finance and counterterrorism and things that are really, really bad. And so that's where it's like those are the two spectrum. At the same time, one thing that did happen today, which is I don't know if this has been widely reported on yet, but charges were dropped against Roman Storm. So really positive.
Well, some charges, not all.
Not all, but look, there is at least movement on some of the things as it relates to Tornado Cash, which once again is kind of a system that at least the government views as being something to get around KYC and sanctioned finance. But I generally think you're not going to find kind of a political will to get rid of KYC, probably ever.
Yeah. All right, that's a tough one then. And, I get it. If I were in their seat and I was, protecting against terrorists and pedophiles and whatever else they're protecting against, I get it.
Like there's a lot worse things that you would enable if you didn't have KYC. And just like the aggregate value of it is way, way larger than what you would be protecting. I just think that there's better ways of protecting that really sensitive information. And nobody seems to have figured it out. I mean, think about all the health insurance hacks that have happened. And this is not the first hack that I think, crypto companies obviously have suffered. Financial services have suffered. Like I'm sure my phone records are probably somewhere because of AT&T or Verizon or whatever that hack was. Like kind of have to assume that basically all information is out there at this point.
Yeah, you do. So what is your guys' prediction? What do you think we're going to get the Genius bill approved? Do you think it's going to be, I saw Alex Thorne tweet out that we might get this approved by Tuesday or Monday of this coming week?
I think it's a Tuesday thing. And like the difference between legislation and deregulation is kind of like a nuanced one. But I think the parties that it does make more comfortable are the institutions who will buy our bags in the future. And that's the most important thing. Yeah,
I agree with you. I mean, that's another, by the way, positive catalyst for the market. So this was always, Trump's plan to, he's going to, the tariffs that he was going to talk about first. And then there's tax cut and deregulation. And those seems like that's the next thing on his policy agenda. So should be good for markets. But have you guys heard anything about consensus? I think that is happening today, day one in Toronto.
Yeah, I mean, we've heard from some people. It's a great builders conference. It's not as much LPs as it has been in the past, but I think that's just fine. I don't think we need as many VCs in this industry, and I don't think we need as many LPs as a result. So, I think the dwindling of capital and the bottom 50% of projects are done by kind of the bottom 50% of venture firms, and I don't think we're going to be sad to see them go.
Okay, last question for you guys. Maybe we could close on just venture in general. I know we've talked about it a good amount, but it seems like it's a relatively challenged. Like Philippe Lafont was talking about it in this. So he's one of the co-founders of Coatue, large asset manager, hedge fund. They do a lot of VC as well. But it was just describing the challenge that VC is going through as an asset class. A lot of it is because there was some pretty irresponsible investing that happened in 2021 and 2022 that we're still working through. A lot of it is because companies are choosing to stay private longer. But either way, it's more and more difficult. And I'm curious. Okay, so maybe Believe doesn't solve, and maybe it still doesn't necessarily make sense for this kind of funding gap for smaller companies that might not be venture scale on the outcome side of things. But I am curious. Do you think something has to break in venture if companies are just staying private forever, or no?
Well, first off, I don't think things break in venture. I think firms kind of live much longer than you could be a venture firm that is still technically active for a very, very long time before you literally have to shut your doors. Just because these are 10-year funds, you're keeping the lights on with management fees if you have them, and maybe you can't raise your next fund, but maybe you're also just not going to be able to raise your next fund for the next few years, and you're going to ride it out to see if you can raise again in 2 or 3 years from now. That's a long period of time. And so I think the balloons don't pop. They very, very slowly dissipate in venture. And I think that that's what we're seeing. We're seeing a lot of the bad deals, a lot of the bad firms slowly dissipate, not going to be able to raise more. They're letting go of people. They're kind of, slowly trying to land the plane, get capital back to LPs so that maybe in a couple of years they can raise another fund. But in the crypto space, I think things happen a lot faster. And I think you're going to start to see a lot of funds, make announcements, or maybe not even make announcements on their fundraises that are much, much smaller than their previous funds, just because there haven't been returns. There may be TVPI, but there's not DPI, which is value in the fund, but not distributions to investors. Or there may be kind of an institutional bias to wait, to Vance's point, on some of these bills getting actually passed before they commit to the next fund. I think that could very much help from an LP perspective. But one thing that I don't think we've talked about yet, but is kind of going on in the endowment world is there's two things. Number one, it seems like there's going to be an endowment tax. Now, is this 8%? Is it 14%? Is it 20%? They don't exactly know, but there will be some sort of foundation and endowment tax. And endowments, historically, the Ivy Leagues have the biggest endowments because they've been around the longest. And what they do is they fund the university from net investment returns from the endowments. They've also been probably the biggest LPs in many of the hedge fund, private equity, and venture fund ecosystems. And so, when you get to a certain size or a certain level, the thing is to go to the endowments to raise funds for your fund. And Yale, I think 2 weeks ago, announced that they are selling their $6 billion private equity interests, which includes venture capital, and they're selling $6 billion of it to get liquidity in preparation for this tax and potentially some of the other liquidity issues that they might be running into. And historically, Yale is the first to do anything in the endowment world. They were the first to go heavy into private equity and venture capital in the 90s, actually in the late 80s. They were the first to kind of do crypto from an endowment perspective. And everybody looks at them because of the guy who ran the endowment for the longest time, David Swenson. He literally wrote the book on endowment management. And so everybody kind of looks to Yale as to what is going on. I would imagine, just based on the fact that they are selling, that there will be tens of other endowments that are also looking to do this. And anecdotally, we've heard murmurs of this actually being the case. So I think there's going to be kind of a sea change from an LP standpoint, in a lot of ways, this probably affects private equity and hedge funds more so than venture, just because those industries are just much, much larger than venture. But I think venture and more of the traditional venture will take the brunt of this as well. It's interesting because venture is also happening. This is also happening in the venture ecosystem at the same time as AI is really booming. And so I think what will probably be the case is it will extend and accelerate the dispersion that was already happening. If you're one of the top 5 or maybe 10 firms in the traditional venture space, if you're, Founders Fund, Sequoia, you're going to be able to raise, and you're probably going to raise more because there will be less investors, but there will be more dollars flowing to you because they won't want to give to the like tier 2, tier 3, or et cetera funds. They just want to give to the main ones because there's only a certain number of deals that are going to become OpenAI type opportunities. And that, I think, will more quickly kill a lot of the tier 2 firms that are probably struggling to raise. And so this, I think, will happen in the traditional venture space faster than people expect. But I think this is already happening in the crypto space as well. And it's been interesting to see. And obviously we have, a lot of LPs that we have these conversations with. So a lot of this is kind of direct from source. But it is, it's an amazing time to be in the US. It's also an amazing time to be in the fund management space because everything is changing week to week.
Yeah, those types of, very fast-paced environments are really fun, and there's a lot of opportunity. Well, sometimes they're fun for some people, but there's also a lot of opportunity if you're hungry and competent. So nice. Bullish framework.
Dispersion is becoming very real.
Yeah. All right, fellas. Anything else that we missed this week, or we can end it there?
I think that's it.
All right. Good stuff, guys. See you next week.
Later.